Good morning and welcome to this Monday, November 18th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats.com, and I'll be your host for the next 30 minutes featuring everything you need to know as you prepare for the trading day ahead. Well, it was another day of records on Wall Street last week. Let's just jump in, take a look at the action. You can see the Dow Jones Industrial Average made its first close ever above 28,000. Up more than 220 points on the day, roughly 0.8%. Beautiful day on the Dow. I think the Dow's got an outside chance. Might be stretching it a little bit, but I wouldn't be surprised if we saw 30,000 before year end. I know that there have been some who've called for it. I just think we're going to be higher. I don't know if we'll get up to 30,000. That would still be, roughly another 6-7% from where we are. That'd be a pretty big move into year end, but I wouldn't rule it out. The S&P 500 closed above 3,100 for the first time ever on Friday, gaining 24 points, up about 0.75%. I have said in the past, I believe the S&P 500, my target on the S&P 500 is above 3,200. There was an initial measurement on the breakout back here above an ascending triangle that measured up to about 3,225. I certainly would not be surprised if we saw that. That would be another 100 points. Roughly about 3.5% from where we are now. The NASDAQ up 61 points on Friday. You can see also breaking to a new high. Still some relative weakness in small caps. We saw small caps really explode throughout October into early November, but getting through this 1,000 level has been a problem. And if we go back quite a ways, actually, let's go ahead and just stretch this out so you can see. I'm going to go back a couple years here. But you're going to see this 990 to 1,000 level all the way back in October of 2018, then again in November on that rally attempt, and then throughout 2019 as the S&P keeps going higher and higher, the small cap 600 index hasn't really been able to generate that breakout. You can see the failure in February, again in early May, now in early November. Short term, I find it a little bit discouraging. I'd love to see the breakout. But if we do make this breakout, I think that small caps could have a huge run to the upside. I would not be surprised to see a very quick 10% spike to get up close to this 1,100 level. So I'd watch that 1,000 level pretty closely. This particular uptrend, we have been holding the 20-day. So if it holds again and can make that breakout through 1,000, I think we could have a quick rally on small caps. And I will say, their best month of the year historically has been December. Go back and ignore this December. That was not a very normal type of December, but most Decembers do see small caps rising. So keep that in mind. If we get that breakout, we could see a big rally here. All right, going back to my summary here, 10-year Treasury yield this morning is down about 1 basis point, a little bit more, 1.82%. I'd like to see the 20-day hold. I'm beginning to think that we're just in a low interest rate environment. It's not a horrible thing if it goes below it, but anytime we see the yield going down, it is money rotating into treasuries, and that's less money that can move into equities. So we want to see this moving higher. If it moves lower, I don't know I don't think it kills the rally. I think maybe it just kind of limits it. The XLV had a beautiful day on Friday. We'll talk some more about healthcare, but this was a nice breakout. Been trending higher. Really, the last 5-6 weeks have been strong for healthcare stocks. Also, communication services had a big day on Friday, and one of the reasons is internet. I'll be looking at a longer-term chart on internet a little bit later as well, but we're on the verge of a breakout, and that would be good news for a number of internet stocks, especially Google, which I talked about in last week's daily market report. It's probably my favorite stock right now in the FANG. I just think it's set up better than the others. Apple's been the strongest for sure, and you can see Apple having another strong day on Friday. But here's Google breaking out. I just think there's been more consolidation, so the breakout, I think, has a better chance of continuing. Apple, I expect, is going to go higher. It's just hard to jump in when a stock's that overbought. It's been going straight up for 90 days. Microsoft, of course, not in the FANG, but Microsoft, one of the big stocks to follow in terms of the sustainability of the rally in the market. Microsoft's been awesome. Big move up. Microsoft and Apple battling it out for the most valuable company in the world. Not too many others close. Amazon's backed off quite a bit. Okay, so that was the update from Friday. Of course, we had a lot of things going on Friday. We could talk about a bunch of stuff. I did mention healthcare led We'll talk a little bit in a couple minutes about Applied Materials, NVIDIA, a couple of semiconductor stocks that reported earnings, had different reactions on Friday. But let's first take a look at what's going on here with the 10-year Treasury yield. It is at 1.82%. Let me just update this, make sure I got the very latest. 1.824, so it has come back up a little bit off the earlier low. I'd love to see this rally back up into the upper 190s, get above 2%. Again, it's, some would look at it and say, well, we don't want higher interest rates. I would argue completely the opposite. Not that we don't want high interest rates, but let's be honest, 1.82% on the 10-year Treasury yield, I don't think that should ever, throughout our history, be considered high. So coming off of historic lows and moving up, all that's going to mean is money rotating out of Treasuries. I think this is a great environment for U.S. equities and really for global equities. We've had accommodating Feds. We've got historically low interest rates. Now we see growth beginning to pick up. I think this is a really good atmosphere. And with the trade deal, I think that would probably be a major catalyst, not just here in the U.S. I think the U.S. is already factoring it in. I think it would be a bigger deal probably for some of the global markets. All right, one economic report out later this morning, coming up at 10 a.m. Housing market index will be out. The estimate is for 71. We shall see. I will point out, though, first that home construction really reached a top back toward the end of October. I mean, now that the yields have been moving higher on the 10-year Treasury yield, I think that's really probably going to establish more of a base for home construction. I don't think home construction is necessarily going to have a huge sell-off, but I do think we could see more consolidation. That was a reversing candle on Friday off of an uptrend. That is a bearish engulfing candle. I would expect a little bit of downside action after that. And if we pull up a longer-term weekly chart, the key for me is the 20-week moving average. I mean, that has been such a tremendous technical support level during uptrends and technical resistance level during downtrends. We've got about 50 points to the downside to that 20-week EMA. So again, I think the fact that we got up to 980, pulling back closer to 900 wouldn't be a horrible thing after this huge run up. And I think if the yields move up, this is probably going to be one of the areas where we see money rotate out of. It is interest rate sensitive, as you can imagine. It's kind of common sense with home construction, home builders. But I don't think it'll be bad because, again, rates are still very low historically. I just think if money is rotating, this is a group that probably would lag for a little bit. All right, mention the healthcare group. Let's go in here. Here was a look at Friday's action. You can see healthcare and communication services leading. And if you pull up, you just click on that healthcare ETF, it brings up the 5 industry groups within healthcare. And look at this, all of them up over 1.4%. Healthcare providers up 4%. Beautiful move there. All right, getting back to a couple of those stocks I mentioned earlier. Apple, beautiful move up. I think it looks good. There was a Bloomberg News article out, and it reported that the iPhone 11 having early success in China. So, technicals, as I've said, and as most technicians will say, technical analysis is the study of price action to help us predict future price action. And a lot of times, if you're just watching the price action, you know what the news is. You know what the news is coming. When I see Apple going straight up like this for 90 days, I expect there's going to be some good reports coming out. So I'm not at all surprised when I see Bloomberg with an article out talking about the success of the iPhone 11. Here you can see on a relative basis, Apple continues to be one of the leaders in computer hardware. Microsoft mentioned it, making a breakout. After sideways consolidation, it's led software to a new high. First time above 2,900. Nice breakout in software. Microsoft, one of the leaders. Google. Here is Google making another breakout. And the thing I just really liked about Google is the fact that it's leading the internet space. And after months of consolidation, it's just making a breakout, which is a lot different than what we've seen on Apple. Again, not to say Apple doesn't keep going higher. I'm just talking about reward and risk. I think that this rising 20-day moving average is going to be pretty solid support for Google going forward. It wasn't that long ago. I just wanted to point out daily market report. For those of you maybe that aren't members of EarningsBeats, this is something I put out every day. And one day last week in the movers section of my report, I talked about the FANG stocks. Pulled up Facebook, and basically I gave Facebook a buy with a tight stop. Amazon, I thought Amazon was a sell. Look at the relative weakness in Amazon. Great company. I'm not talking about the basics of the company. I'm just talking about whether or not you can make money on it in the short term. Right now, as a momentum trader, I do not want Amazon. Apple's a great company, great relative strength. It's just overbought. So I think it's a strong buy, but I'd like to get a little bit of a pullback as a trade. That 20-day moving average would be interesting. Netflix, look at the downtrend, market breaking out to all-time highs. You can imagine the relative weakness here in Netflix. So for me, it's a sell. Again, great company, lots of competition out there, the market struggling, not a whole lot of support for it right now, so I'm not going to trade it. But Google, I loved. I love the fact that it was breaking out here above the 20, breaking out above these prior highs. This was just a few days ago at 1,300. And again, now it is 1,333. That's up, another 2 2.2% or something, heading in 2.5% just in the past couple of days. I think it goes much higher. I think Google is going to be a leader here through year end and into 2020. All right, mentioned Applied Materials and NVIDIA. Both reported on Thursday after the bell. Here's the reaction on Applied Materials. Let me show you the reaction on NVIDIA. NVIDIA came down on heavy volume. Applied Materials, look at the volume. And you go back over the last year, that is quite the volume coming in to Applied Materials. And it's not just Applied Materials. We have seen Lam Research. We have seen KLA Corp, KLAC. These are companies that are in the same space as Applied Materials, just coming out with great reports, great outlooks. I suspect you're going to have some nice leadership from many of the stocks in this group over the next few months. Now, at some point, we're going to get a pullback. I mean, my goodness, semiconductors have been straight up. I wouldn't freak out. I mean, you want to be part of this move to the upside, but you can't jump in after the group's gone up 90 days and expect we're not going to get a pullback. So if you're jumping in now, you've got to be willing to take some risk to the downside. I love the group, but it is getting a bit stretched. I love Applied Materials here. Let's see. Let's move on to earnings. And by the way, before I do, here is the Applied Materials relative strength versus semiconductors breaking out to a new 52-week high. That's kind of what I'm looking for. I want to see these groups that are looking strong, and then I want to find the leaders. Those are the ones that if the group continues moving up, they're likely to be leading it. And if the market pulls back, or if the industry group pulls back, the leaders generally are not going to pull back as much as the others. They're going to remain leaders. So that's the whole idea. All right, earnings. Not a whole lot in terms of earnings being reported right now. Today's a pretty light day, but one company that did report in earlier this morning was QDian, and you can see the stock. It's been downtrending relative to the specialty finance group, even though specialty finance ready to break out to new highs. You can see the stock is well off its earlier highs. It did come up just about little over a week ago, and make this bounce off the 20-day and move to new short-term highs, but it has still been a laggard. While their earnings, they came out, they beat on the top line, missed on the bottom line, and then they lowered their fiscal year 19 guidance. Let's see. I don't think I have this one up just yet. Let me pull this up and give you a pre-market quote if I can. But down here at the bottom, I mean, you can see this is the relative strength that has just not been good. I try to stay away from stocks, especially if I'm looking at holding a stock into earnings. I want to hold one that's been strong, not one that's been weak. QD is down 8.6% pre-market action today. So obviously market not liking that guidance, the lowering of guidance going forward. And the stock, there's a reason why for 90 days, the stock underperformed its peers. And now we find out why. Again, technical analysis providing us the news before it hits. All right, let's move on. Actually, I want to stick with future earnings. I've got some big companies coming up tomorrow morning. Later today, not so much. I think the biggest one later today is ZTO. We'll pull this chart up quickly and take a look. It had gapped down, held support, and it's been rallying. On a relative basis, it's been rallying. I would expect this one to have a decent report looking at how it's been performing relative to its group. If there's one concern, it's just when everything switched from growth to value back in August, we saw a lot of industry groups that were leading the market back then that reversed. And we've seen this downtrend now for the last few months on a relative basis. That would be my biggest concern holding ZTO, is just the market seems to not be favoring those stocks anymore. So the company could come out with a good report and market may just not care. And that is a risk of holding it. But there's lots of risk of holding any company into earnings. Let's take a look at a couple of big ones that come out tomorrow. Home Depot reports tomorrow morning. Home Depot continues to trade pretty well against home improvements industry. And I think home improvements industry has been pretty strong. I think Home Depot will have a nice report tomorrow. We'll see what kind of reaction we get. But I'd be surprised if they come up with anything less than a beat on the top and bottom line. MDT, this is Medtronic, making a breakout here. It had a huge report back in August, has been a leader in the medical equipment group, and medical equipment just broke out. So the stock breaking out with volume in a group that's breaking out, strong leadership. I would think Medtronic comes out with a good report tomorrow. TJX, turn our attention into the apparel retailers. TJX, one of the better ones. I mean, it recently, within the last month, hit a 52-week relative high to the apparel retail group. If you're an apparel retail fan, you want the leaders coming through. And I am an apparel retail fan. We have a couple of alerts out at EarningsBeats right now in the space. So I would really like to see TGX come through with a nice report. I think they will, being a leader, but we'll see. TDG, this is in the aerospace group. I'll talk about aerospace in a bit. It's a group that certainly is regaining its strength, and TDG is one of the leaders. So it did hit its relative strength high all the way back in August, but I still think this overall uptrend's in place. I would expect a good report. I think we could get a few good reports out tomorrow. We'll see. ARMK, another one that reports tomorrow. This is Aramark, another leader, but it is in the restaurant group, one of the worst areas of the market. Again, since August, this is a group that has just been completely trashed. Market doesn't care. Many of the stocks, even the best ones in the group, have been thrashed to the downside. This has been a relative leader. We'll see what happens. Maybe it can start a turnaround in the restaurant group. And then the last one I just want to mention is Kohl's. This one also in that apparel retail group. Not been one of the best stocks, as you can see, but it has just moved to about a 5.5-month relative high versus its peers. And you can see it breaking out above these key areas, or this one key area of resistance between about 54 and 56. We've taken that out. Volume's picked up a little bit. This one's going to be an interesting one. I'm going to give it a coin flip. I'm not sure which way it goes. I'm hoping that the relative strength means that we'll get a good report. But the fact that we haven't cleared this gap resistance, I think, opens up the possibility of downside. I think we got to be careful. All right, let's move on. Upgrades, downgrades. Going to start with Owens Corning. Owens Corning was upgraded today. The stock looks pretty good here. I'm also going to go over and see if I can give you a quote pre-market, see if it's doing anything. It is, well, the bid is up about 1%. I don't see any trades, but I do see the bid higher. So it looks like it is going to move further up into record high territory, or at least 52-week high territory. And its group's been strong. It's been showing relative strength. I kind of agree with this upgrade. I like Owens here. Let's take a look next at ROK. And I do think R is okay. A big gap up last week with earnings, taking out the prior resistance. It is being upgraded. I suspect it's going to go higher. I didn't like the candle from earnings. I thought maybe that might set it up for a little bit more weakness, maybe even down to 190 or a little bit below, maybe to test that rising 20-day. And that may still happen. If we take that tail out from last week, the high, which looks like it's around 207, 208, if we clear that, that would be bullish for the stock. Otherwise, I would suspect maybe we see some consolidation. I do agree with the upgrade. I think in time, this is a stock that goes higher. I love that breakout on earnings. Just don't know short term if it makes it. VSAT being upgraded today. Oh, and let me check that ROK, see if we got a pre-market. Stock up 73 cents, 0.36%, so really not much. All right, so VSAT getting upgraded today. VSAT up 2.4% in pre-market. It is currently at 73.55, which is going to take it above its 50-day moving average. I actually think with this one gapping up above the 50 and then coming down and holding its 20 and turning back up, this one's got a pretty decent shot, I think, to run up to 77.5, 77.75. So I think in the short term, I would agree with the upgrade. I'm not sure if I'm sold yet on the longer term. We're starting to show a little relative strength, but I'd like to see telecom equipment begin to turn around. So this one, I think short term, maybe we get a little bit more push to the upside with the upgrade, but I'm not ready to declare a bottom in on the stock. All right, how about a couple of downgrades? This is one that I definitely do not agree with. Ultra Clean Holdings, this is a stock that has been under major accumulation since reporting its earnings. This was a company I loved going into its earnings report because it was sitting at a 52-week relative high before it even came out with earnings. Then it's exploded. Look at the volume trends. I have a feeling, I don't trust Wall Street as much as I can, as far as I can throw them. I have a feeling it could be somebody who just missed the boat. And hey, we're going to downgrade the stock, call it valuation. And when it comes down, maybe we can get in a little cheaper price. Don't know that that happens, but it certainly could the way the market is set up. I just don't trust somebody when they come out with a downgrade on a stock that's been heavily accumulated for the past 3 months. One stock that is being initiated, this was one of my 3 you must see from a few days ago. I was pointing out this breakout here. Coming up, it had been consolidating, made the breakout above about $2, went back down to these recent lows, nice hammer printed on Friday, and then all of a sudden, coverage was resumed with an overweight today on the stock. I saw earlier it was up a few pennies in pre-market. I think this one still looks good to me. I think that the move up, sideways consolidation, broke out, held the 20-day, nice hammer. I think we could move higher from here. Just wanted to point that one out. All right, let's move on because we got to keep rolling here. Industry groups. I wrote a blog article this morning talking about GE and the diversified industrials and how strong they've been. Let's take a look at some of the action that has been taking place in the market and just get a feel. When we get into a bull market advance, you just start to see one breakout after another. Healthcare, not a very good area of the market for a while, but the last 5 weeks, all of a sudden, healthcare's caught fire. Mentioned earlier, all five industry groups were up on Friday, but let's take a look at a couple of key areas. Healthcare providers, big move up, taking out the July high, now taking out, just on Friday, taking out the February high. We closed above 2,100, the highest level we've had in 2019. Healthcare providers certainly improving their look here. Medical equipment, breaking out, sideways consolidation, just broke out on Friday. I'm going to show you one of my 3 you must see is in this group. So you want to stick around here for just a couple minutes. But I like this breakout here on medical equipment stocks. I like the fact money is beginning to rotate into healthcare. This is a group certainly to keep an eye on, as are biotechs. Biotechs I've been talking about recently, and the group broke out, closed at 2,057.85, and looking back on an intraday or on a daily basis, that was the highest close of 2019. We had an open above, but we have not had a close above that Friday close. That was the highest close of 2019. And I've been talking recently that biotechs are a lot like semiconductors. When they get going, they get going. And you can see that they have gotten going over the past 6 weeks. If they break the 2050 area, I just want to point out on a weekly chart, and I'm going to go back even further here. I want you to see a longer term 10-year weekly chart here. I see a move up, and I could draw a couple of things here. I could draw a cup with an extended handle. That seems kind of not, I don't know, you don't usually see a handle for 2 years. But what I do see here is a long-term uptrend followed by almost equal highs coming over here at about 2,200. We had one little quick false breakout and then back down, but basically 2,200 has been the highs. We got rising lows. I see a long-term ascending triangle, and if biotechs make the breakout above 2,200, this measures to 2,900. That is a lot of room to the upside on this space. All right, the XLC. Let's pull up the XLC for a second. Breaking out. I mean, here we're getting more and more of these. So what looks good in this space? Well, how about internet stocks threatening, actually making the breakout above that July high? Really nice looking chart here. Breaking out again, talked about Google, very strong, one of the leaders in the space, and the space is breaking out. And then also wanted to point out broadcasting and entertainment. Made the breakout above that July high, pulled back. It actually lost the breakout level. I think it could see the 20-day moving average, but I love the volume that's come into this space. I think this is a group that continues pushing higher after maybe a quick little pullback. Technology, I'm not going to go into a whole lot. I will tell you that software has broken out. And there you can see taking out that July high. Also, the electronic equipment group. And if I lengthen this to a couple years, you can see all the tops coming in near 680, 670. We've made that breakout. The industrials, let's just pull up the XLI. I think that's clearly a breakout. Industrials are broken out on a relative basis, breaking the downtrend, and on an absolute basis. A couple of areas here. I mentioned the aerospace group earlier. Well, we're on the verge of a breakout here. Watch this one closely. Defense. Not too long ago, big fan. They pulled back for a while. Well, they are strengthening again. Looks now like an uptrend with a cup. Let's see, what else? Well, there are a bunch that have already broken out in the industrials. I'm kind of running out of time here. But here you can see the industrial machinery group making the big breakout there. How about commercial vehicles and trucks? Haven't broken out above that January 2018 high, but did take out these reaction highs throughout the rest of 2018. I think that's a good one. How about HV? I mean, these are all in the industrials area. Look at this, taking out this breakout area around 460, 465. How about, I think this one's just preparing for a breakout. Delivery services. Look at these tops up here, just below 1025, maybe 1020. Got up, pulled back, watching there for a breakout. How about transportation services? This group had been really beaten up, but it has broken above now these reaction highs and is trending higher, as the successful 20-day test would show. That's basically it for those. In financials, you've got asset managers, banks, investment services. Let me just pull that one up. You can see that one making the breakout. I didn't look at Goldman Sachs. That's a stock that I've been watching, though. Watch to see if we get this breakout in Goldman Sachs. That could be an important one as well. All right, let's move on to the 3 you must see. I mentioned the medical equipment stock, so I'm going to start off with a stock in that space, DHR. Downtrend, you can see we actually had a little bit of a false breakdown. I wish I had my friend Bruce Fraser on here right now. He's a Wyckoff guy. I think this is a reaccumulation phase and a false breakdown there. And look at the volume coming in to Danaher on this break of this downtrend. I see a breakout coming on Danaher. So that is the third chart of the 3 you must see. Next up, NVTA. This is Invitae Corp. A couple of things here. Number one, biotechs. It has not been a very strong stock in the biotech space, and we know biotechs had been weak, but now biotechs are strengthening. And look at this one turning up. Looks like maybe it's broken its downtrend. The volume on Friday coming in, and really the last 6-7 days, we've seen big volume. We saw what looked like a big breakdown and reversal, and now up closing above that 50-day moving average. This one is incredibly volatile. It's in that biotech space. You can see it's been as low as 9 and as high as 29, and that was in a 6-7 month stretch. So this one can move very rapidly. Make sure you're willing to take on that risk if you look at NVTA. I actually would like to see it maybe fill this gap. I would like it closer to that 20-day moving average. Last one I want to mention is Mohawk Industries, MHK. It is in the furnishing space. Now, furnishings has broken out and been very strong. MHK on a relative basis, you can see down near a 52-week low. So what might I like about it? Well, it seems like the volume, things have changed. I love this candle. And as the stock comes down for 5-6 days in a row, let's watch to see if it holds this 137.50 area. We could get a reversal there, so watch for it. All right, that is it for today. I want to thank everybody so much for joining me. We did announce we are going to have Market Vision 2020. It is an online conference that will be held Saturday, January 4th, 2020. Going to give out the list of speakers tomorrow. Make sure you sign up for that free newsletter, the Market Vision 2020 free newsletter. Go to our website at EarningsBeats.com and then simply go to the top of the page, look for Market Vision 2020, click on that link and sign up, get all the updates as we go forward. Anyhow, everybody have a great day, and see you back here on Wednesday. See you at Stock Charts TV tomorrow at 9 a.m. Take care.